Hello students, myself Gaurav. I hope you enjoyed my last video and added some value in you. I shared the Pspcl Revenue Accountant, Accounts Officer and Internal Auditor syllabus. So here I am again in front of you by starting the first video on accounting. So here I would discuss about the fundamentals of accounting. So let's start. As you can see on the screen that there are few terms which are very quite popular in our subject, that is accounting. Here are the terminologies which are used, and definitely these will help in our exam. Many MCQs which come in the form of their basic terms and definitions. Firstly, we start with the fundamentals of accounting. First terminology is bookkeeping. Many students know that bookkeeping is different from the accountancy. Here bookkeeping means daily recording of transaction in the books of account. Only those transactions which have monetary implication are recorded. All transactions are recorded in the local currency. On the other hand, accountancy is a wider concept. It starts where the bookkeeping ends, includes classifying, summarizing, and interpreting the transactions. Students, we know that there are three main branches of accounting. One is financial accounting, cost accounting, and management accounting. Financial accounting includes journal, ledger, trial balance, final accounts. We will later see that I will try that each video will contain these parts as well. Another is a cost accounting, which includes like cost sheet, process costing, batch costing, contract costing, operating costing, etc. Management accounting is basically to cater the decision making of the managers. It facilitates reporting to the management, includes ratio analysis, break-even analysis, budgetary control analysis of financial statement. Students, as we know that there are many stakeholders of our company which require these accounting information from time to time, which includes like investors, employees, lenders, suppliers and creditors, customers, government, public, management. Next is components of financial statement, which includes balance sheet, P&L and cash flow statement. Some few accounting terminologies like transaction. Transaction is any activity involving exchange of money or money's worth in the business. Asset means which owned by the business, resource owned by the business gives future economic benefits. It includes current asset as well as fixed assets. Current assets वो होते हैं जो within 1 year में easily convert हो जाते हैं cash में. On the other hand, fixed assets can be tangible and intangible. Tangible assets, you know that which have the physical existence like plant and machinery, land and building, etc. Intangible, which do not have any physical existence like goodwill, patent, copyright, etc. So moving to the next page, we have this depreciation. Okay, depreciation means the reduction in the value of fixed asset over a period of time. Like we have studied assets, similarly we have the liabilities. Liabilities also forming the parts of current as well as non-current. Liability means the amount owed by the business, means the business which we have to make the payments to other, that comes in these category. Current liabilities means amount to be repaid within 1 year, and non-current liabilities means it to be repaid over a longer period, right? Contingent liability means a situation may or may not arise which is uncertain at the present moment. okay, like pending court matter and etc. Net worth means owner's equity or shareholder funds. You can say that the share capital plus reserve and surplus net of fictitious assets. Working capital means current assets minus current liability. If it is gross, then it is only current assets. Otherwise, in the net working capital, you will have current asset minus current liabilities. Capital means owner's money, as you know that, and drawings is the opposite one, which we withdraw from our business. So goods, you know that, and the purchases of resale material or the purchase for the use in the production of goods or for rendering of services. Expenditure, cost incurred by the business, it might be capital or the revenue. Capital, you know that it results in assets and it goes to the balance sheet. On the other hand, revenue is just for the period and it goes to the profit and loss account. Next is our trade discount and cash discount. Trade discount means when we do our bulk buying, we get trade discount and we record our revenue by deducting that. Next is a cash discount, which we usually get while we do the payment early, and which is shown separately in the profit and loss account as an expense. Inventory stock which is unsold. This can be material, work in progress, finished goods, consumable stores. Next is our debtors and creditors. Debtors, which you know that, to whom we sold the goods. On the other hand, creditors who supplied materials or goods to us. Bad debts means which is irrecoverable from the customer. It has to be reduced from debtors and is lost to the organization. Next is the main concept which that might come in our exam, that is accounting concepts, principles and conventions. Concept, you know that, means the idea or the notion. Principles, you know that, which become a guide for selecting a procedure or convention. Student, I am discussing conventions more detail because sometimes the question comes from this. First is entity concept. Business is separate from entity, then its owner. Personal transactions are not recorded in the books of accounts. Second is money measurement concept. Only those transactions which can be measured in money are recorded. Periodicity concept means business life is divided into periodic intervals, usually 1 year. Okay. Next is the accrual concept. Transactions are recorded as and when they occur, not when cash is received or paid. Next is matching concept. Expenses matching with the revenue of that period only should be considered. Another convention is the going concern concept. Financial statements are prepared assuming that the business will continue in future. Valuation of asset is dependent on this concept. They are recorded on historical cost basis and not on liquidation cost basis. Cost concept. Value of asset is determined on the basis of historical cost. Right, students? And last is the verifiable objective evidence concept. It means that every transaction should have some verifiable objective evidence to show that the transaction happened in reality. Why this we do? Because it leaves audit trail, which is important to ensure an authenticity of the transactions. Guys, I hope this will help and add some value into you. Bye, take care.